Big developments in tech, markets, and crypto today, from a major Taiwan-U.S. chip supply chain pact in the works to record betting volume around the Super Bowl, and Ethereum's founder outlining how blockchain could power the future of AI. Let's break it all down. In high-stakes tech diplomacy, Taiwan is pushing back on recent U.S. demands to shift a large portion of its semiconductor production to the United States. Taiwan's vice premier has declared that relocating 40% of the island's advanced chip capacity to the U.S. is impossible due to the deeply rooted manufacturing ecosystem the country has built over decades. That comes as part of broader negotiations between Washington and Taipei aimed at strengthening semiconductor supply chains, which are critical for everything from consumer electronics to defense and artificial intelligence hardware. Under agreements already in motion, tariffs on many Taiwanese tech exports to the U.S. will be cut, and Taiwanese companies are committing to significant investments in U.S. manufacturing capacity. Analysts say this isn't a rejection of cooperation, but rather a strategic clarification. Taiwan is willing to expand its presence and investment in the U.S. without uprooting the core of its advanced R&D and production infrastructure that remains the global leader in the sector. For markets, this signals a balance between supply chain diversification and preserving advanced capability, one that could benefit both countries' tech industries without destabilizing the global semiconductor ecosystem. For global markets, stronger U.S.-Taiwan tech cooperation could support chip industry stocks with clearer demand outlooks, reduce investor concern over supply bottlenecks, stabilize pricing for consumer electronics and auto sectors that rely heavily on semiconductors. In short, this deal isn't just trade policy, it's shaping how the world will build and deploy next-generation technology for years to come. Next up, financial markets are reacting to something less technical but equally telling. Record trading volume at Kalshi, the event derivatives platform around the Super Bowl. Kalshi lets users trade on the outcomes of real-world events, not just stocks or commodities. This Super Bowl, markets surged as traders bet on multiple outcomes like the point spread, MVP, and even prop markets. According to data, volumes on Super Bowl contracts hit all-time highs, signifying growing retail participation in event-based markets. Why this matters: greater retail engagement shows individual traders want exposure beyond traditional stocks and crypto. Market innovation, event derivatives are becoming more mainstream with more liquidity. Behavioral trends, sports events may now serve as a new niche for retail speculation. This is part of a larger trend where financial markets are expanding beyond conventional assets into behavioral and event-driven derivatives. Higher volume signals both interest and risk appetite, a dynamic that traditional exchanges have not fully tapped. So while it might look like fun and games, high participation in markets tied to sports outcomes is a serious signal about how retail investors are reshaping financial innovation. Finally, in the intersection of crypto and artificial intelligence, Vitalik Buterin, co-founder of Ethereum, outlined how the Ethereum blockchain could play a critical role in the future of AI ecosystems. His vision centers around using decentralized computation, secure data provenance, and token-aligned incentives to power autonomous AI networks. Here's the core idea. AI systems need trusted data sources, transparent models, and verifiable computation. Ethereum's smart contracts and decentralized infrastructure could help validate data integrity and ownership. Tokens or crypto-native incentives could align AI agents and data providers around collaborative goals. This isn't just theory. The broader ecosystem is already experimenting with blockchain plus AI integrations, from decentralized identity frameworks to data marketplaces where AI models can access permissioned, verifiable data without centralized intermediaries. Buterin's emphasis is on trust, alignment, and openness, weaknesses in many centralized AI deployment models today. A decentralized layer could potentially help combat AI hallucinations by verifying data provenance, enable secure multi-party computation across models without exposing raw data, incentivize quality contributions to shared AI training sets. Whether Ethereum becomes a core infrastructure for AI remains to be seen, but positioning blockchain as a trusted coordination layer gives us a framework for how crypto and AI could co-evolve in the future. From semiconductors and global trade to event-based markets and decentralized AI, these developments show how technology and finance are intersecting in new ways. Supply chains, innovation platforms, and algorithmic trust systems aren't separate trends anymore. They're part of the same network shaping future markets. If you found this breakdown useful, hit subscribe for more market and tech insights, and then let us know in the comments which topic you want covered next: chips, crypto, AI, or markets.